With the crude pipeline deal signed, eyes could be next set on Uganda's proposed oil refinery. However, recent findings from a report by a UK-based think tank, Climate Policy Initiative, reveals in Analysts that Uganda's oil refinery could simply be unviable in the long run. But government has its logic in place against the projected disadvantages.
I think Uganda's import bill in terms of petroleum products is in excess of $1 billion. So if you're able to have a refinery, even if you're going to, they're going to earn annually $1 billion, but it's saving you that import bill, it certainly makes a lot of commercial sense from the perspective of Uganda. In light of the fact already when petroleum products are being imported, there's the wear and tear of the roads.
The refinery will produce somewhere around 600 metric tons per day of gas. 600. So we have more than enough gas to meet the needs of Uganda currently. And so, of course, our intention initially is satisfy Ugandan market, work on policy drives with Ministry of Energy to increase the use of LPG in the country, move people away from charcoal and firewood, which of course is leading to deforestation.
Uganda is relying on an import substitution strategy and the regional market from its neighbors. But in order to make full use of the regional market, it's pitted against larger, more effective refineries elsewhere across the world.
For a country like Kenya, or even a country like DRC, or even a country like Rwanda, what would inform its decision whether it makes sense for them to buy the refined products from Uganda is the economics. It's capital intensive to build a refinery, and then the margins are really low. So you're likely to run a very profitable, very super profitable project if you're operating on economies of scale.
With key final touches on the front-end engineering design for the oil refinery, government will have an uphill task of getting potential investors on board to finance the $4 billion refinery that Uganda's hope will wheel forward our petroleum fortunes. Stanbic and ABS have made commitments to be part of the oil financing arrangements, with Uganda still open to East African states to commit on funding. Paul Murungi, NTV Business.